Well, hello and welcome and hello. Thank you for tuning in to Un Poco Moss here on a beautiful September 26th. It is a Tuesday. It is 3:25 p.m. out here in beautiful sunny Los Angeles, 6:30 out in NYC. Hope it's a great day wherever you are. I have one question for you folks. Do you guys want to hear something really stupid? Um, I thought you might because you stopped by my channel here today. But guys, I want to talk with you, of course, about the Sofi stock, Sofi Technologies Incorporated. Ticker symbol is SOFI. Guys, the stock was down 11 cents or 1.46 percent on the day, up one big shiny penny after hours, sitting at $7.41. And I know what you're going to say. You're going to go, well, Danny Deals, you're just a big dummy because you said there was support at 8. And yeah, I thought there was going to be support kicking in at 8. But if you actually look at the numbers last Friday, guys, the net borrowed was 9 million shares. There was 38 million shares churn traded altogether. That was the volume. 9 million net borrowed. 14 million shares borrowed, 5 million shares returned. If you borrow 9 million out of, 38 million, you're talking about more than 20% of the churn short. And then they drive the stock all the way down to 750. Yesterday and today, there's 23 and 22 million shares traded respectively. And then again, the net short yesterday was a couple million shares. Today it was 3.2 million. That's the net. So the last 3 days to drive the stock, down from 860 to 740, you basically had almost 15 million shares net borrowed versus return. So you're having this massive short digging back in. You're seeing the cost to borrow max. I mean, today you think, oh, it's just a little bit of a down sideways day, but that's not really the case, guys. I mean, cost to borrow max today, I believe, was like 9%. Why would the cost to borrow be so high when they're talking about, there's just all these SoFi shares, there's millions of shares, billions of shares, nobody wants them. Cost to borrow 8.6%, guys. Almost 7 million shares borrowed, 3.5 million returned. So 3.27 million net borrowed change. And then you go over the last 7 days, you've seen not only the short interest of the free float go up, but you've seen free float on loan go up 9%. Shares on loan go up 9%. Days to cover go up 12%. This is just in the last week. Utilization is up 12.55%. And the short is going up as the stock price is going down. The short is now back over 13% of the free float. Um, so you have to just look at what's actually going on. What made the stock go from 860 down to 740? Is it that retail's dumping, institutions dumping, insiders dumping? Are people just naturally selling off the shares? No, they're shorting it in a setup for whatever they're going to do next. So you have to know that coming into the earnings report, the last one where there's probably not going to be a net profit, there's definitely not going to be a net profit, but we think there will be a net profit in Q4. There's going to be either a pump and dump or a dump and pump after the ER. It's gonna be one way or the other. And if you look at the stock price pushing up into the earnings report as it was before the Chia Pet Army short attack after Q1. You saw the price kind of pushing up and up from the low fours up to 650, and then it just sold off like a stone. The other earnings report, the last one you saw is kind of pushing up, went up to $10, and then kind of pushed back down, consolidated, traded sideways to 950, and then after that, of course, the day of the earnings, they just ran that incredible pump and dump up all the way through the 11s, sold it off completely like the next day, and then dumped all the way down to $8, and then of course now down into the sevens. But guys, shorting aside, I just want to talk a little bit about support because everybody's kind of freaking out about that $8 line. And you can see why. Over the short term, August 18, that was support. July 6, 7, 8, or excuse me, July 6, 7, and then 10th, that was support. Again, on June 23rd, that was support. So 8 has been a critical support level over the short term. Now, people like me, big, fat, loudmouth, idiots on the radio, we and the butt on the radio, um, we've been saying $8 because you can see this top green line is $8, and you could see it being rejected repeatedly from $8. A lot of action around there, actually broke through. But if you look at, for instance, this one, um, these tails go up through 8. So you have a few jabronis who are willing to keep buying up past that level. Remember, when you're at the top, buyers call the top. There's always more sellers willing to sell as the price goes up and up and up. But it's the last few idiots who want to buy the very, very top after everyone else is exhausted, everyone else has got out. So this lower line is kind of the 740, 741 level, and this upper line is around the $8 level. I guess just under the $8 level. I think I accidentally moved it a little bit. But just look at this one, for instance. Which line would you say is more important? The $8 line where there's just a few people on one day giving up, or this line at 740 where on February 1st the stock fails trying to break through, and then they run this giant pump and dump up over $1, and then the very next day it comes back down, finds support again at 740 level, then it's resistance here, resistance, resist. The point is, it makes a market here, guys. Buyers and sellers are coming together. That really should define the edge of the market. And that's what I think the difference is between what people call critical levels or pivot points with what people call resistance. That extreme end where there's absolutely, zero buyers left. That's not really significant. That's an anomaly. Those are outliers. What you want to look for here is the last level where the algos, where the market makers actually come together, and some market makers are still buying and other market makers are still selling, and they're both there at the same time in equal numbers, and then one kind of overwhelms the other and it pushes back down, and you find everybody that was willing to buy at 740 has bought, and then the selling pressure resumes, and then again comes back, tries to challenge that 840 level again and fails again, and then happens a couple more times, stock sells back off. But you can see this happen repeatedly, where it's easy to argue that, well, $8, 813 might have been the ultimate last level where anyone was willing to buy. $7.40, $7.42 might actually be more significant. Here's another example. Going back to August of 2022. I guess this would be this is obviously a massive pump here. You have the stock going from 640 to 823 almost overnight. And then you see, yes, $8 is a significant level here. It becomes support just momentarily. Then it breaks down, finds support at 740. And then 740, look at the candles that are really critical around the $8 level: 1, 2, 3, 4. And then 1, 2, 3, 4, 5, at least 5 to 6 candles hovering around that $7.40 level. Again, same thing back here. You see a lot of pump and dumps or dump and pumps around this level. Again, only one or two candles, one candle at the pump and one candle on the dump actually touches that $8 level. You look at one tail, two tail, three tail, four, and then 5, 6, 7, 8, 9. I mean, there's like 9 candles trying to touch that 740 level. These two come close. Even again on the run up, like before, this level's 8, and that's critical here. But if you look at this, it kind of basically goes right through 8, touches 2 candles. Go back to 740. 1, 2, 3, 4, 5, 6 candles pulling around that 740 level. So could 740, 742 actually be a more critical level in terms of a pivot point than $8? Well, $8 is a nice round number. It's good to talk about. You like the fact that it did flip from resistance to support back in June, and it looks like it's broken down again, certainly right now. But you're still holding on, I think, to that critical level. You go a little bit below that, I just want to see buyers and sellers continuing to congregate around that line as they have so many times. Again, um, this is what I don't look for, this kind of outlier level. Like here, I would say, 850 in this region is a lot more significant than 8 because you're just bouncing off 8. You're not making a market there. At 850, people are coming together. Over here, yes, $8 is more support, 850 more resistance. You're in a little bit of a channel, but sometimes it can just be a little bit deceptive because, even though all the YouTube idiots such as myself have been saying $8, $8, 813, 813, if you actually look at what the chart is telling you, perhaps $7.40 is a hidden key level that could function as support. Now, you see basically the free fall, it touches this level, and then we've basically been holding on there for the last 3 trading days while the stock has been, heavily shorted and borrowed against. So the fact that the stock is holding up is again telling me there's no retail people selling here. If they weren't selling pre earnings at 950 and then they weren't dumping at 1150 on the pump and dump, I just don't think it stands to reason that any retail or market makers, unless it's mechanics, are going to be dumping a lot of shares down here at the 740 to $750 level. So, guys, I want to take just a moment and talk about the high interest rates that are terrifying everybody. Of course, the options, guys. We have 750 loaded in. Max Pain is at around $8. You have 9,000 short-term calls for this Friday at 8. Open interest there is 14,000. Then you even have 1,200 at 850. A lot of open interest, but quite a few calls also at 750 that, they are certainly looking to kill, and those are down big. So you have to believe retail is going to own almost all of those at the end of the week and probably get slaughtered because market makers see the writing on the wall, and even if they're down on the options they're using to hedge, they are going to dump them while they still have some value, maybe Wednesday, and then completely kill them Thursday and Friday to just stick it to retail. They love to stick it to retail. Oh, don't they? Yeah, and you can see just Max Pain, they're calling $8, but there's a little bit more calculations. 2-to-1 call put ratio, so bullish there, and the options are directionally bullish. As you note in quite a few headlines, they're starting to kind of push. It feels like the media is starting to push the SoFi stock just a little bit more. But again, guys, it's easy to look at a chart. You just see what you want to see. You're just grasping at straws. Yes, over the short period of time since June, $8 has functioned as support, but I just think this is a false breakdown because there's so much borrowing activity on low volume, relatively low volume. The stock couldn't help but go down. I mean, this drop from $9.07 over the course of 1, 2, 3, 4, 5 trading days to $7.50. So you're talking about losing like what 18% of the value of the shares in 5 trading days for absolutely no reason. There's no news, there's no negative, and in fact, I think high interest rates are going to be good for SoFi for um, one reason that most people aren't talking about, and that is sort of I would call it sort of laziness, or I would say resistance to change that people experience. Say you're with Bank of America, you're with Chase, you're with one of the mega banks, or you're with one of the regional banks. You know, why haven't you switched? You're going, okay, I'm only getting 0.5%. I'm getting 1/10%, 100th of a percent on my check, but I don't have that much savings. I know I could have got 3.5%, 4% at SoFi, but you're hearing from the Fed, you're hearing from all these talking heads. They're like, well, interest rates are going to start going down toward the end of, even Anthony Noto, SoFi, Liz Young, these analysts were saying, okay, by the end of this year, they'll probably start cutting. Wrong, wrong. Um, as Charlie Murphy said, wrong. Rick James wiping his feet on your couch. You buy another couch, Eddie Murphy. But anyway, so people are thinking, okay, interest rates are not going to be high that long. Should I bother to switch? I like my mega bank. It's convenient. I have all my ATM. But now they're thinking, okay, guys, interest rates are going to be high perhaps all through next year. And SoFi is now not offering 3.5. They're offering, 4.5 or whatever the case may be. So now instead of getting 0, I could be getting 4.5, and those rates could be high for, instead of a year, it could be 3 years. So I think a lot of the people that were resistant to change to get that higher interest rate are, in fact, going to be encouraged to migrate from mega banks to fintech neobanks. And when you're talking about these neobanks, these branchless banks that offer high interest rates, of course, a lot of the competition, Discover, American Express, Axos Bank, Ally, a couple of those do offer a superior interest rate to SoFi, but I think nobody offers the breadth of products, the product wheel, the actual customer experience that SoFi can bring you. Certainly not, American Express or Discover. Those are not really like integrated high tech things that young people are interested in. That's sort of, people that just do it as an add on to their credit card. I think very, very few people would say a one stop shop for all your finance, banking, um, you know, stock trading, crypto, whatever, blah, 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 all your loans. They're not going to say that's going to be Amex, Discover, Axos, possibly Ally, possibly. But I think SoFi, again, bringing people back in with student loans, there are a lot of things that are going to attract a young, affluent customer with a great job and great credit to SoFi. It's not just the interest rates, it's all the other places SoFi can save you money. Think about it. You get 2% back on your credit card purchases if you cash it in for stock at in your SoFi trading account, or I think if you pay off something in another SoFi account. So you basically double up your points. So you're taking 2% basically off your credit card interest rate right there without even doing anything. Most places give you 1% if you're lucky. And then if you try to turn the points into cash, you get half the value. Or you try to turn it into a payment, you get half the value. The only way you get full value is if you traded it on their bullshit like travel points or something like that, or for one of their fucking tote bags or souvenir trucker caps or mini bats or some bullshit like that, but it's never anything useful. With SoFi, all you got to do is click a couple places. You can buy SoFi shares, you can buy Tesla shares, you can buy whatever you want. You get double the points. It's a huge incentive. There are just many, many, many reasons to switch to SoFi. And I think as interest rates stay high, it only puts more and more pressure on people with a lot of savings and with good jobs that have high direct deposits to switch to SoFi. How long are you going to keep getting 0% interest on your savings when you could be getting over 4%? It just, now I know if you think, oh, it's not going to last very long, you might not want to do it because it's a big inconvenience. But at a certain point, all the money you're leaving on the table is going to outweigh the inconvenience, and you are going to switch to SoFi, whether you like it or not. Guys, the SoFi stock all the way down to $7.40. Remember, we were just in the mid 11s. When was that? It wasn't very long ago. The stock just popped up and went crazy. It was July 31st. So we're talking about less than 2 months. The stock basically dropped down to 8 and traded sideways back upward toward 9 for just about exactly 1 month from, the 16th to the 15th. And then it just proceeded to fall off a cliff from 907 all the way down to $7.40, which is the predicament we find ourselves in at this time. A lot of people are saying, hey, should I buy now? Should I buy? Guys, I bought back in the mid to low eights. I sold some shares to flip at like 1150, and I didn't catch the bottom, guys, and you never will. You can't determine exactly where the bottom is going to be. I think it's a great entry point here. I've bought everything I can buy right now. If I able to free up some more capital, or if the stock keeps going down, perhaps to $7, I will definitely buy some more. But for now, I am extremely overloaded on SoFi. I got an absolute ton of shares. Very, very happy with my average, and I'm kind of content just to hunker down and see where the price action evolves into the Q3 earnings report. And remember, guys, Q3 is over this week. Can you believe it? So we can expect another earnings report in just over a month. What do you think that's going to show? What do you think the EPS is going to be? And more importantly, in my mind, what is the membership growth, deposit growth, direct deposit rates? What do the default rates look like? What do you go when you get inside the numbers? Yeah, it's easy to see just earnings per share, but there's some other metrics that are extremely important that are going to get us to that Q4 profit and are going to get us to increasing profits all through next year and the years to come. And those metrics are what I am looking for more than just sort of these short-term fluctuations. Guys, anything I messed up on, anything you'd like to say, please let me know down in the comments. It is un Poco, Moss, I promised you something very stupid, and I think I delivered in spades. You guys have a great rest of your Tuesday evening. We will talk at you again real soon. It's the SoFi Stock, ticker symbols SOFI. It's Un Poco Moss. For Danny Deals, Hurricane Lopez, and Stock Karen, you turds have a wonderful evening, turds. Nerds.